BlackRock. The name might not ring familiar to everyone, but this company holds the purse strings of the world. They manage trillions, and their decisions impact everyone. BlackRock is the world's largest asset manager. They control over $11.5 trillion. That's more money than the entire GDP of most countries. They are a financial behemoth. This immense wealth gives BlackRock unparalleled influence. They have stakes in almost every major company on the planet. From tech giants to oil companies, BlackRock's reach is vast. But their power extends far beyond Wall Street. BlackRock's tentacles reach into the halls of government, shaping policy and influencing global affairs. This is the story of BlackRock, the company that controls the world. BlackRock's power stems from its sheer size. They manage trillions of dollars in assets, including stocks, bonds, and real estate. This gives them an overwhelming presence in financial markets. BlackRock is the largest shareholder in countless companies. They own significant stakes in Apple, Microsoft, and Amazon, just to name a few. This gives them enormous sway over corporate decisions. Their influence extends beyond individual companies. BlackRock is a major player in index funds, which track the performance of entire markets. These funds are becoming increasingly popular, further consolidating BlackRock's power. As BlackRock grows larger, so does their influence. Some critics argue that they have become too big to fail, posing a systemic risk to the global economy. BlackRock's influence isn't limited to the financial world. They have deep ties to governments around the globe. Their executives often move between Wall Street and Washington, blurring the lines between business and politics. BlackRock veterans have held top positions in the Biden administration, including the Treasury Department. This revolving door raises concerns about conflicts of interest and undue influence. BlackRock CEO Larry Fink is a powerful figure in his own right. He has the ear of world leaders and regularly advises policymakers. His pronouncements on economic and political issues carry significant weight. BlackRock's political connections give them a seat at the table when important decisions are being made. Critics argue that this gives them an unfair advantage and undermines democratic processes. In recent years, Larry Fink has emerged as a vocal advocate for sustainability. He has urged companies to consider environmental, social, and governance (ESG) factors in their decision-making. Fink's pronouncements on ESG have made him a target of both praise and criticism. Some applaud his commitment to addressing climate change and other pressing issues. Others accuse him of hypocrisy and woke capitalism. BlackRock has faced backlash from some Republican-led states for its stance on ESG. These states have pulled billions of dollars from BlackRock funds, accusing the company of pushing a political agenda. Despite the criticism, BlackRock remains committed to ESG. The company believes that sustainability is not only good for the planet but also good for business. Section 5. Empire Building. BlackRock's Strategic Acquisitions. BlackRock's thirst for growth seems insatiable. The company has a long history of strategic acquisitions, expanding its reach into new markets and industries. In 2024, BlackRock acquired Global Infrastructure Partners for $12.5 billion. This deal made BlackRock the world's second-largest infrastructure firm, giving them a major stake in roads, bridges, and other essential assets. BlackRock's acquisitions have raised concerns about consolidation and lack of competition. Critics argue that the company is amassing too much power and stifling innovation. BlackRock defends its acquisitions as a way to provide better services to its clients. They argue that their size and scale allow them to offer lower fees and a wider range of investment options. Section 6. Too big to fail? BlackRock and the FDIC. In recent years, the financial world has been increasingly dominated by a few major players, and BlackRock stands out among them. With assets under management exceeding $9 trillion, BlackRock's influence extends across global markets, impacting everything from stock prices to government policies. BlackRock's size and influence have raised concerns about systemic risk. The sheer scale of its operations means that any significant disruption could have far-reaching consequences, potentially destabilizing the entire financial system. Some experts believe that the company is too big to fail, meaning that its collapse could trigger a global financial crisis. This concept, often associated with major banks, now applies to asset managers like BlackRock, whose tentacles reach into various sectors of the economy. The Federal Deposit Insurance Corporation, or FDIC, has proposed new rules to address the risks posed by large asset managers like BlackRock. These regulations aim to ensure that firms of this magnitude do not become a liability to the financial system. These rules would require these firms to hold more capital in reserve, making them less vulnerable to shocks. By increasing their capital buffers, the FDIC hopes to mitigate the risk of a catastrophic failure that could ripple through the global economy. BlackRock has pushed back against the FDIC's proposed rules, arguing that they are unnecessary and burdensome. The company contends that such regulations would stifle innovation and limit their ability to provide value to their clients. They claim that they already have robust risk management practices in place. BlackRock asserts that their existing frameworks are sufficient to handle potential risks, and additional regulations would only add layers of complexity without significant benefits. The debate over BlackRock's size and influence is likely to continue. As financial markets evolve, the balance between regulation and innovation remains a contentious issue, with stakeholders on both sides presenting compelling arguments. As the company grows larger, so too do the stakes for the global economy. The ongoing discussions will shape the future of financial regulation and determine how we manage the risks posed by these financial giants. Section 7. The Oligarchy Question, BlackRock and Economic Inequality. BlackRock's immense power has fueled debate about economic inequality and the rise of oligarchy in America. As one of the largest asset management firms in the world, BlackRock controls trillions of dollars in assets, giving it significant influence over global financial markets and economies. This concentration of power has led many to question the fairness and equity of the current economic system. Critics argue that the company's influence is a symptom of a system rigged in favor of the wealthy and powerful. They point to the growing gap between the rich and the poor, and the diminishing opportunities for upward mobility as evidence of this imbalance. The voices of ordinary citizens often seem drowned out by the interests of the elite. A 2014 study found that the United States operates as an oligarchy, where a small group of elites exerts outsized influence over government policy. This study highlighted how economic elites and organized groups representing business interests have substantial independent impacts on U.S. government policy, while average citizens have little or no independent influence. BlackRock's political connections and lobbying efforts are seen as evidence of this trend. The company has been known to spend millions on lobbying to shape policies that favor its interests, further entrenching its power and influence within the political system. The growing concentration of wealth in the hands of a few is a major concern for many Americans. This disparity is starkly visible in the contrast between affluent neighborhoods and impoverished areas, where the lack of resources and opportunities perpetuates a cycle of poverty. They worry that the American dream is becoming increasingly out of reach for ordinary people. The promise of equal opportunity and the chance to achieve prosperity through hard work seems to be fading, replaced by a reality where economic success is determined more by birthright and connections than by merit. BlackRock's role in this system is complex. While it wields significant power, it also operates within a broader financial and regulatory framework that shapes its actions. The company's defenders argue that it is simply playing by the rules of the game, maximizing returns for its clients and shareholders as any business would. The company's defenders argue that it is simply playing by the rules of the game. They contend that BlackRock's success is a result of its efficiency, expertise, and ability to navigate complex financial markets, rather than any inherent unfairness in the system. Critics counter that BlackRock has a responsibility to use its power for good and to promote a more just and equitable society. They believe that with great power comes great responsibility, and that BlackRock should leverage its influence to address systemic inequalities and contribute to the well-being of all, not just the privileged few. Section 8. A Human Cost. Blackstone and the Housing Crisis. BlackRock's influence extends far beyond the world of high finance. The company's investments have real-world consequences, as evidenced by the growing housing crisis in the United States. Blackstone, the world's largest alternative asset manager, is a major player in the housing market. The firm owns over 300,000 rental units across the country. Blackstone has been accused of predatory practices that have contributed to rising rents and evictions. Critics say the firm prioritizes profits over people, displacing families and exacerbating the affordable housing crisis. The link between BlackRock and Blackstone highlights the interconnectedness of the financial system and the real economy. Decisions made on Wall Street can have a profound impact on the lives of ordinary people. Section 9, Conclusion, the future of power in a BlackRock world. BlackRock is more than just a company. It stands as a towering figure in the financial world, a behemoth whose influence extends far beyond the confines of Wall Street. It is a symbol of the immense power and influence wielded by asset managers in the 21st century. With trillions of dollars under management, BlackRock's reach is unparalleled. As the world's largest asset manager, BlackRock's decisions have far-reaching consequences. Every move it makes sends ripples through global markets, affecting economies and societies alike. The company's investments shape markets, influence governments, and impact the lives of billions of people. From pension funds to sovereign wealth funds, BlackRock's portfolio touches every corner of the globe. The question is not whether BlackRock has power, but how it will choose to use it. Will it steer the world towards a more equitable future, or will it prioritize short-term gains? Will the company prioritize profits above all else, or will it embrace a more responsible and sustainable approach to capitalism? The choices it makes will have profound implications for the planet and its inhabitants. The future of power in a BlackRock world remains uncertain. The path it chooses could lead to a more sustainable and just world, or it could exacerbate existing inequalities. But one thing is clear. The decisions made by this financial giant will continue to shape our world for years to come. The stakes are high and the world is watching.